Good day to you. This is Dr. Andrew Godperson of the Life Worlds team. Let me start with something that will perhaps disappoint you. I will not show you a secret way how to become a millionaire. Such ways simply do not exist. But what I can do is present you two powerful tools with which you can organize and optimize your daily and your long-term finances. These tools are a private budget or the household budgeting and the systematic financial planning. Today, first of all, I would like to give you an overview what household budgeting and financial planning are, and then go a bit more into details, show you the basic structure of a household budgeting, and then show you how you can determine potentials for savings. Coming then to the private financial planning, I will show you the triangle of objectives of financial planning, the process of financial planning, and a little example that will show you the elements and structure of financial planning. So first of all, what is household budgeting? It's very simple, it's a listing of earnings and expenditures. But you need to cover all your earnings and expenditures, you shouldn't miss a point. And it needs to be transparent so that you can really see what are your earnings, what are your expenditures, and what is the account balance that you can save or invest. The objective is, first of all, to organize your daily finances efficiently and most effectively. And secondly, your daily finances are the basis for your long-term financial planning for larger investments. So you need, because if you do not have any money saved, you probably cannot invest. So first of all, get your daily finances working, and then go to the systematic financial planning with larger investments. And that is the strategic level. The financial planning is the strategic level of finances. And you plan your finances over a long time or longer time that can go up to a lifetime. Important is to integrate all relevant aspects of finances, and that you combine your actual financial planning and your finances or your financial planning. That means your life is not there for your finances are there for your life. So have a look first, what would you like to achieve in life, and then what financial background you need. So very shortly, the goal of financial planning, of systematic financial planning, is to fulfill and secure your dreams of a lifetime from a financial point of view. Now, what is household budgeting? A bit more in detail. Mentioned earlier, it's really simple. It's more or less earnings minus expenditures equals account balance. So the money you've left for savings, for investments. I strongly suggest that you use for your personal budget or your household budgeting the categories that are provided here. They're based on the international standards of the statistic offices. For the earnings, it would mean you use the categories income from employment, income on investment, pensions, selling assets, and other earnings. Expenditures should be convenience goods, clothing and footwear, furnishing and household equipment, health, transport and mobility, communications, education, recreation and culture, services, insurances, financial services and loans, and other expenditures. Now, if you have listed your earnings and expenditures, you have a perfect personal budget, how can you determine potentials for savings? And there are two methods, a subjective one and an objective method to determine the potentials for savings. First, the subjective method. For every element of expenditure you have, you design or you develop an individual utility curve. It means in the end, you determine how much or how high is the utility you get out of a pound, a dollar or euro you spend. And then the general rule is you have a potential for savings if the utility from your free financial means is larger the loss of the utility because of your savings at another point. Let me add, it's quite a task that's quite difficult to design or determine utility curves. Even leading scientists have more than problems with it. So probably an easier way, and also an objective way, which could be an advantage, or normally is, I'd like to present you now. You simply compare your own expenditures to the average expenditures of a reference group. That is first your country, the average expenditure in your country. And then you should go a bit deeper to find out the group or the spendings of the group that matches your socio-demographic characteristics. And then, if your own expenditures are larger than the average expenditures of your reference group, there is a potential for savings. Now, if you use our tools on the plus level on a website lifeworld-money.org, this will be generated, these objective potentials for savings will be generated automatically for you. But coming now to the financial planning. First of all, financial planning, the objectives. There's a triangle of objectives, profitability. Of course, if you have an investment or you want to do an investment, you need cash. So your savings need to be profitable. But there also can't be a high risk that you use your savings. Doesn't matter how profitable your investment plan or your saving plan is. And thirdly, if you have a perfect plan, it's profitable, low risk, but on the way to your goal, in this period of time you run out of money, it's not ideal, I guess. So the three objectives are profitability, low risk, and liquidity. Now, what is the process? The process is, as I mentioned earlier, do not start with going directly into finances. Start first, and point out what are your objectives in life, what events do you want to experience, what are the phases of your life. And then add your regular earnings and expenditures to these phases of life. Furthermore, add the non-recurring earnings, for example, an inheritance. And then you go to the investments. Investments again, first think of what you'd like to buy and to have at a certain point of time. A car, a house, a yacht, whatever. And then you have to determine how to finance these investments. First of all, the basis is the account balance from your regular earnings and expenditures that you can invest as own capital, and you know what you can use for debt service after you have made the investment. The rest is financial mathematics, and find the best solution referring to life of loan, interest rate, and how to design your debt service. Finally, analyze, evaluate your financial plan with regards to the three mentioned goals: profitability, low risk, and liquidity. Now I would like to show you an example to point out and make clear what are the elements of financial planning. First of all, the phases of life. In our case, university, first job, second job, and you see the financial elements are earnings, expenditures, and the account balance. Now you can see what would it mean for my finances without any investments on 4 levels: debt service, balance, loans, and funds. And just have a look at funds. This person would have saved by the end of the 10th year £95,000. Now we're starting with planning the investments. First of all, this person thinks, I need a car at the end of investment, in the end of my university time before I go into my first job. In this case, the person invests £1,000 own capital, so it needs a loan of £19,000, assuming the car costs £20,000. Life of loan 5 years, interest rate 5%. And additionally, a useful life of 6 years and a resale value of £7,500. What does this mean for the financial planning? You can see here you have to do some debt service over 5 years. You have loans going from 90,000 then to nothing to zero, of course, the 9th year. And your funds, of course, your savings are not as high as before, but still, at the end of year 10, £70,000. Now, yeah, as assumed, the car will be sold after 6 years, so there need to be a new car. Second investment is a new car, and as you can see, you have now it's a bit more expensive, better car, £30,000, and as you can see, we have at the end of year 10 £77,000, and that means right, there's no loan required. And then, simple as that, just what changes is the last year. It will mean the funds this person has at the end of the second job, at the end of this planning period, are £47,000. Now, I hope I could give you an idea or an inspiration that it could be very useful to use the two tools of household budgeting and systematic financial planning. You're more than welcome to use these tools on our website, livelihood-money.org. And for now, I say goodbye. I wish you all the best and take care.